Good morning, friends. Here comes my second video for the chapter called Introduction to Marketing Management. And this is the objective number 2 that we are going to cover in this particular chapter, that is exploring the basic concepts of market and what is the need to customer value. So, moving further with the objective 2 in this particular chapter, so I'll be first of all talking about the core marketing concepts. So here is a list of the core marketing concepts that starts from target markets and market segmentation, marketplace, market space, meta markets, who are the marketeers and prospects available in front of a marketeer or an organization. What do you mean by needs, wants, and demands for a product and service that you are required to consume? What do you mean by customer value and satisfaction? How exchange and transactions takes place in the market? What do you mean by customer relationship marketing? What are the different marketing channels, supply chain, competition, the marketing environment, and the marketing program? So here is the diagram of the core marketing concept that I'm going to talk about out of all the marketing concepts that I've already spoken. So I'll be covering the need, want, demand, followed by the products and services that happens through exchange, transaction, and with the purpose of achieving customer value and satisfaction while achieving the quality of the products and services. And then this everything takes place in the market. So talking about the need is actually something that pre-exists in the market. It is a state of felt deprivation for some basic satisfaction. Or ideally, a need is considered to be a gap between the actual state and the desired state. For example, when it comes to need, you have a need for food, you have a need for clothing, you have a need for traveling, you have a need for exhibition. So there could be different examples of need. Whereas a want means a specific satisfier or probably the different objects that will satisfy human need. These wants or these objects are actually covered by the marketeers in several ways. For example, if you are hungry, so you can have a burger, or if you're thirsty, you can have a soft drink. So if you want to travel, you can go by either a car or a train or a flight, or you want a contractor to build your home or house. So there are multiple examples of want available in the market. Demand is basically a human want. So first comes the need, then comes the want, and then comes the demand. So demand is basically human want that will satisfy the human need. And these are backed by two things. Firstly, you should have the buying power when it comes to the demand, and you should be willingness to spend on what you wanted actually. So for example, you can demand for a Mercedes Benz provided you have the buying power and the willingness to spend. Otherwise, you may end up buying a lower version or a lower priced segment car, for example, a Wagoner, if you don't have the buying power. You can also demand for a Rajdhani brand. You can also demand for a airline brand such as Tata Airlines. Kingfisher was earlier there in the market, but not now available. In the exhibition industry, Swift Corporation is a famous brand that you can demand for maintaining the infrastructure with respect to the product and services you're trying to display or showcase in a particular exhibition. So I like to explain need, want, and demand through utilization of a case study. For example, X person is hungry and wants to have a good quality food in a hotel, but later he decides to go to a five-star hotel because he has enough money available with him. If he is not willing to spend or if he is not having the buying power, so he'll not go to five-star hotel and he'll not ask for a good quality food. So if you find out the need, want, and demand factor from this, so the need is the hunger, want is the good quality food, and the demand is the five-star hotel because of the buying power and the willingness to spend money in that particular hotel. So if you look at the demand concept, it is actually a combo of your want and the buying power. So in a nutshell, if you combine these elements together, only then the demands can be created. Otherwise, there is no demand. It is restricted to the want concept. Now, moving on to the another core concept of marketing, which is very, very important for you to understand, is known as the product, or you can call them goods or satisfier, or a marketing offer, or offering, or a solution, or these products are collectively sold in the form of a package. So if you define product, it means a bundle of benefits that will satisfy human need and want in the market, and this can be offered for exchange process. For example, a car is a product, whereas a Maruti car is a brand. For example, computer is a product, and a Dell or an HP or Asus is a brand. For example, motorcycle is a product, whereas Hero or Honda or Suzuki is a brand. Telephone is a product, and mobile phone is a product, whereas Samsung, Apple, they are the brand. Products are mostly tangible goods. So, it is most of the time not limited to physical objects. Anything which is capable of satisfying human need is considered to be a product, provided the ownership gets transferred through the exchange process. So product may also includes other entities, for example, experience, persons, places that you are visiting, different organizations, or the information you're trying to explore in the market, and the ideas that are being made available to you is also known as products, provided the ownership gets transferred to you through the exchange process or through the transaction. So in addition to tangible goods, products include services at the same time, but the services uh, does not give you the ownership in the longer run. A temporary ownership can be obtained, but the real ownership in case of services is not possible. But in case of product, it's possible. Services are most of the time intangible in nature, and they don't result in any ownership, as I've already mentioned. So it is basically the activities that one party may offer to another party at a profit. So banking is a service, airline is a service, tax preparation is a service, home repair is a service, teaching is a service. For example, if you go to a bank and you open an account, so you don't become the owner of that particular account forever. You are the owner till the time you are the customer of that particular bank. So if you surrender that particular account or credit card or a debit card, you will have to return everything to bank. In an airline, in a similar way, you don't become the owner. Through the service encounter, you can move from one place to the another. That's the services only. So in services, the most important thing is that you don't become the owner. So these products and services are exchanged or transacted while providing customer value, customer satisfaction, and achieving the relationship in the market in the longer run. So let us understand, what do you mean by customer value? So if you own a particular product, you try to relate it with the cost of obtaining it. If the benefits that you have received from the product, from the customer value proposition, from the offer, and if you compare it with the cost against the benefits, and if the result is positive, so means you have derived the value out of it. So these values are actually perceived. For example, one may receive a value whereas the other person may not receive it. So the value will vary from customer to customer. Ultimately, creating a good image is the main idea in the market. For example, FedEx cargo services, as compared to other services, is could be related to a customer value concept. Students satisfied with the college and the brand they have adopted is probably derived value concept. The perception factor of being internally satisfied is very, very important when it comes to providing the value to the customer. Right. So the value is very, very important. So the value of the newspaper for a teacher could be higher as compared to a student. So a teacher probably could end up paying rupees 50 for a newspaper because the benefits against the cost could be more. Whereas a student would not pay rupees 50. He may only end up paying rupees 5 because he is not incurring those benefits from the newspaper. So another concept is customer satisfaction. In order to satisfy a customer, the performance of the marketeer should exceed the expectation of a customer. So if the perceived value of a product is met as per the expectation, only then the satisfaction takes place in the market. So the idea to satisfy a customer is deliver more than what is promised. A lot of companies are there in the market, that claims to be good in terms of customer value. For example, Airtel, Reliance, Apple, Samsung, Hyundai, as compared to, Maruti in terms of providing services, they claim to achieve higher customer satisfaction. So, they get a good ranking and rating in the market in terms of achieving the customer satisfaction. Total quality management is very, very important concept because this is linked to the quality. If the quality is good, only then the customer will be satisfied and will achieve a higher customer value. So total customer satisfaction through good quality products and service and processes. For example, BEM certification in diamond industry means the genuine gold. So most of the time when you achieve a quality aspect, you get certification from the renowned players or the regulators who probably claims to be the quality conscious in that particular industry. Look at this diagram for value. So as you can see, the benefits received are higher as compared to the costs incurred. So the remaining gap, as you can see from here, is for the value that you have received. So if this benefits received is higher, only then the value comes in. If the benefits received is lesser as compared to the cost incurred by you, so the value will not be derived. So this value concept is psychological in nature. For example, X person will receive extra benefit as compared to the cost, whereas the Y may say that I didn't receive those benefits. However, the cost incurred is higher. So, these concepts most of the time are psychological in nature, as I've already mentioned. Similarly, the satisfaction is also a psychological concept. For example, if you have an expectation of 8 and the performance of the marketeer is given a 10 rating, so the satisfaction is very high. So you are delighted actually, the performance is higher and the expectation is lower. But if the expectation is higher and the performance is lower, so you are dissatisfied. So there are three concepts here. One is customer dissatisfaction, one is customer satisfaction, and the other is delightment. So higher the performance means the delightment, and the lower the performance means the dissatisfaction. If the rank or the score is equal, so if you achieve 10 on 10 means you are the satisfied one. So that is very, very important for you to perform higher while setting the expectation standard lower. So depending on the product's perceived performance relative to buyer's expectation, customer satisfaction value is totally linked. So very, very important for you to understand customer value and satisfaction in the longer run. So value is the ratio of perceived benefits and cost that customer has to incur in providing or acquiring that product or service. Satisfaction depends on customer perceived total cost and value. So if you look at the total customer derived value, a company is giving a product, service, image, personal, so that becomes the total value by the company. Whereas a customer gives you money, gives you time, gives you psychic cost, gives you energy, that becomes the total cost for the customer. So in a nutshell, the total benefits versus the total cost. So customers generally experience satisfaction when the performance level meets or exceeds the minimum performance expectation level. So similarly, when the performance level far exceeds the desired performance level, the customer will not only be satisfied but will be delighted, as mentioned earlier. So customer value is the ratio, and the customer satisfaction is dependent upon the performance and expectation. Very, very important for you to know. So now, I have already spoken about the need, want, demand for a product and service. So this comes in order. First of all, the need comes in, then want, then demand for a product and service. And this product and service gets exchanged and transacted, and then the value satisfaction relationship comes into the picture. And this everything comes or takes place in the market. So now talking about the exchange process, so exchange means that you are obtaining a desired object from somebody by offering something in return. So, a hungry man can have food by offering goods or services in return. You can offer a pen against a pencil. You can offer a mobile phone, probably in exchange for anything, maybe a, a hotel deal or maybe an airline ticket. So this depends upon consumer to consumer. So, the exchange process is very, very important in the marketing, but exchange will be converted into a transaction if it is recorded in the books of accounts. So transaction means a business between two parties, or at least two things agreed upon terms and conditions. So in exchange, that books of account was not involved, but it is converted into a transaction when it is get recorded in the books of accounts and a typical tax invoice is generated to you. then it becomes a transaction. For example, in exhibition industry, the organizer, rent out the space on certain guidelines to the corporate people for their event participation and gives an invoice in return. So this is a monetary transaction. For example, if you buy a laptop and you demand for an invoice and pay the taxes against it, it becomes a transaction concept. Otherwise, if there is no transaction, if there is no, books of accounts are involved, there is no taxation is involved, you can restrict yourself to the exchange only. So let us take, a scenario of exchange process of marketing. Look at this particular model or a diagram, wherein a customer identifies need as hunger. So, you see Domino's and you want to have that particular pizza from the Domino's outlet. So in return, a currency is exchanged for Domino's pizza through that particular outlet. So you satisfy actually your hunger, and Domino's makes a sale while giving an invoice. So, customer responses to those marketing stimulus most of the time. So this flowchart depicts a simple commercial exchange for you. There are 10 types of entities in a marketing process. So these marketeers are involved in selling a product or a service, or they could sell an event to you or an experience, or most of the persons they're involved in marketing. And there are the places that being marketed, the properties being marketed, the organization ideas and information can be marketed. So most importantly, there are three important things when you talk about the marketing concept. First of all, you need to be customer oriented in marketing. Those marketers who are not customer oriented, probably they'll end up losing the customers, they'll end up losing the market share, they'll end up losing the sales revenue in the market. Thereby in the longer run, they'll end up losing their positions in the market. So if you really want to stress long-term profitability, customers should be at the forefront. So this long-term profitability means you need to reduce the cost of the customer, you need to provide more value to the customer. So you need to integrate in order to achieve that particular value or satisfaction. You need to integrate all the departments, be it HR, be it finance, be it IT, because without this integration, customer satisfaction is very, very difficult. So integration is the key. For example, an exhibition in industry, they'll integrate their production department, electrical department, logistics department, to serve their customers in the longer run. Otherwise, customer satisfaction will not be achieved on site, because if the production, if the logistics, they are not in synchronization with each other, for a seller, it is very difficult to achieve customer satisfaction. So this integration is very, very important. Be it a B school or be it an exhibition agency, be it a production department, be it a telecom industry, be it an automobile industry, this integration is very, very important for you. Now moving on to the another concepts in marketing is the different types of market available for you. So broadly speaking, there are two types. One is B2C and one is B2B, but there are other dimensions to it. The B2B gets converted into retailer segment, then a government segment, then a non-profit segment, and then there could be various dimensions to marketing. It could be a rural market, it could be a marketing to the bottom of the pyramid, it could be an international market for you. So there are different types of markets. So in order to develop a market or in order to develop a segment, you need to understand these different types of market to improve on your sales revenue. For example, in B2B segment, if you talk about these different markets are companies, institutions. There are different channels in which there is a distributor, retailer, wholesaler, stockist, dealer. It could be an NGO or a cooperative. It could be a middleman. See, the idea when you talk about a B2B marketing is a non-personal usage. Most of the time, the usage will not belong to, for your personal consumption. It could be a institutional or a professional usage. When you talk about a B2C market, most of the time it is a personal usage, and the families and households, they are buying the products and services. For example, if you're buying a car, you're buying a pen, you're buying a fan, you're buying an inverter, you're buying a laptop, but it is actually for your own personal usage. Whereas in B2B, it is not for personal consumption. Then there could be a C2B market, a consumer approaching a business or an aggregator. They're trying to understand, the different pricing available for them and the best price or the best deal they like to go through. So there are different platforms available who are supporting customers to reach businesses. For example, Policy Bazaar. You click onto that and you try to compare different policies from different players being offered. There could be a book my show offering you different prices and different proposals. Then comes the C2C market. These are the platforms who are connecting different customers. They are providing those platforms for selling their products and services. For example, if a customer want to buy or exchange a mobile phone to another customer, so they can go to OLX and they can put on their products and they can advertise them free of cost. The other customers will be able to trying to get in touch with them, and then that's how the exchange takes place. Then comes the B2G, which is a government market. For example, Royal Enfield, Maruti, for example, Honda. They are different players who are involved and they try to, sell their products and services to government. Boeing is the wonderful example for government-related transactions. And then comes to business to employee market or the internal market. So they probably different banks would approach different corporates to open up the salary account for their employees. Then there could be a referral market because in marketing, most of the time recommendations matters a lot. And a doctor recommending to you a particular tablet, a doctor recommending to you a particular knee replacement product, or for cataract surgeries, doctor recommending different products to you, architects recommending different products to you while construction of a home, consultants giving you advices. So most of the time, there are influencers, there are opinion leaders in the market who guides you which products you should buy. There could be a recruitment market, there could be an influencer market, there could be a supplier market that provides you raw material, and then those raw material gets converted into the final product. So likewise, as you have seen, there are different markets available for you. So, with this, I would like to end this topic of covering basics of marketing, in which I tried covering the basic concepts of marketing and the different types of market for you. So, with this, I'd like to thank you all for listening to this particular video. And after this, I'll come up with another video in this series for achievement of objective number 3. So, with this, I'd like to thank you once again. Thank you.